Welcome to the weekly heads up for New Zealand business from DAA Business Consultants and Chartered Accountants.
Welcome to this week's report. Payroll changes, though there's a few in the wind.
Yep, the 1st of April all takes effect. Most people think it's employers only, they're actually impacted, but the employees also get impacted because of the different changes that are coming through.
So what are the changes?
Well, the biggest one is Kiwisaver. Up until now, all the employer contributions that are made on behalf of employees are not subject to tax. That goes from the 1st of April. So the bit that the employer tips into Kiwisaver is now subject to what they call employer superannuation contribution tax.
So that will come off, obviously, and disappear.
Yep, that gets comes off the contribution that's made. So the Kiwisaver employee actually gets less in their Kiwisaver fund from the employer. Although there is a couple of options for treating it another way. It depends on how generous your employer is, really.
So what should we be asking for?
If you're an employee, you want them to take their contribution and add on the tax, so you still get the same amount. If you're an employer, obviously you want to
Go the other way.
Yeah, go the other way.
That's open for negotiation, obviously.
It's up to the employer and the employee to have a chat. I think most employers will go just the default route where they'll just take the tax off and the employee gets less in their fund.
And it shows on the payslip?
It does indeed, yep. Hopefully most people will be able to sort of do it through the software, or if they're doing it manually, they might have to explain it to the employee exactly what's happening.
But it doesn't go in, it doesn't go in and come out again, it just doesn't go in.
It gets paid just to IRD like the normal thing, and then the net amount goes through to the Kiwisaver fund.
Student loans?
Yep, there's a couple of new tax codes coming in. That's for people that are either overpay or want to pay more or have underpaid. They've got to use new codes. But the biggest change is that every employee has to have the student loan tax code now. So what it means is for employers, they've got to do a whole pile of more paperwork because their employees have to give them a new tax declaration code.
So that's so that the government can see who's earning what?
Yes, they can then track where all the student loan people are. Obviously, if you're under the threshold, you still don't have to pay. But if you're over, then you will be contributing towards your student loan. It's just their way of tightening up to make sure that everyone pays.
Means more people will go overseas.
Yeah, but there's a certain rules around that, so you just can't sort of take off and leave it behind. They are going to police that a lot more, and they are doing it already.
Payroll software?
Yeah, if you're on the payroll software, you've got to make sure that you've got the latest version. Otherwise, your Kiwisaver tax isn't going to come through. For some people, it may mean they've got to go and buy a whole new payroll package because they haven't been on the subscription service for updates. Which could be a wee bit costly, but it's important they do it. If they don't do it, then they're going to be wrong when they go to do the first payroll in April.
And of course, that's when all the changes happen.
Yep, so you've got to make sure that you've got it all installed prior to your first pay processing in April.
What happens if you don't?
You'll have to manually work it out, or you're just going to get it wrong. And then you may have IRD knocking on your door to say, please explain what's going on here.
Because that'll compound.
Yes, definitely.
You must have reminders with the new month and the new financial year.
Yeah, there's a couple of things. The first is you're employing school children. If they're under 2,340 annually, you don't have to deduct the tax. If they're over, obviously you've still got to deduct the tax as per normal, and they've got to give you a tax code declaration form. And the other one is if you've got employees that are leaving, make sure you actually fill in the cessation date. IRD get quite annoyed by those employers that don't. And it also makes it worse for the employee that's leaving because they look as if they've got 2 or 3 jobs.
Very interesting times.
It is. There's going to be some big sort of headaches for employers, I think, going forward because they've got a lot of things to think about now and a lot more paperwork.
Which basically means that you need to keep in touch with people like Kerry. And if you're not a very big business and you really don't want to get involved, don't forget, DAAs have what they call a Madam Secretary.